The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time. And this ninth day, is it? Ninth day of December. Most importantly, we're looking at some kind of a confirmation of at least a short-term sell. And if that's the case, that there is a short-term sell here, we will have to wait until Friday to see if the weekly chart's kicking. Let me go through what I'm looking at least. You've got the E-minis right here at minus 18, 2034.25. I had drawn this in. It was actually the December contract, went to the March contract, and showed this left side, right side price time match with a target of 2027.75 in this Chapman wave pattern that I call the potential, and this is very interesting, it's a potential flat base restart, and that's what it was. And what it said is that because there was a very quick pullback after peak D, the fourth highest peak from the low bar, there was a chance that if there were any pullbacks after that, they came close and then went to higher highs, it would suggest this pattern was the pattern to follow, because we'd be looking at a test of the low bar. In this case, I chose 27.75 in the E-minis, but it applies to the other indices as well. And if that was the case, it should break it. And then we will see if there's a snapback rally, because if there isn't, it's far more serious. In the 120-minute chart, what you can see, and that was at a peak F, and then I had an F/B because it was an alternate count. Then the MACD and stochastic went negative, so that spike to the upside, slightly higher high, turned out to be a right arm extension in the Chapman wave methodology. Peak G, which we had confirmation of only through at the close yesterday, and then today's the follow through to the downside. Now, I'm going to just show you something else. In the 120-minute chart, there was an arch formation, and that arch formation said this is the inverse of when I'm looking at a pattern and it comes down sharply, makes what I call the lowercase h, and then within that lowercase h, there is the potential that if the right side test of the left side low bar is successful in it comes out in a certain formation, you can then get a cup formation from the whole thing that takes you back over the H peak into the leg down that was the back of the chair of the H. Now, that's the exact opposite here. It's what I call the drop bucket formation in the Chapman wave methodology. Or maybe I'll have to get my CD out. I'll get there just now. And what that says, that the double top that we saw at 12, was it 12 o'clock? It was at 4 o'clock on the 1st of December at 2068.50, pulls back, makes a pattern that says, yeah, you went to a nominally new high at 2070, but there's still a cup formation. If you make a higher high, we're going to call that G, and it went to 2071.75, and then it pulled back. And what happens in this particular pattern is if you take out 1/3 to 1/2 of the distance between the trough and the lip high, there's a real good chance that not only would you take out the base, but you go 1-to-1 to the downside. If that's the case, you've got a left side, right side price time match, and that's this green line right there to that low bar. And it did it within 2 bars, all the way from the low of December the 1st to today. Now, in 120-minute bars, that's a lot. In days, it's only a couple of days. And what happened is we went to a lower low, below 2041.25. We're below the 2027s. We went to a low today so far of 2055. That is really a pretty deep sell-off. That just says, whoa, this took a lot of people by surprise, and now they're going to get out of a bunch of things. However, let me look at this. for my subscribers, what I show, and this is going to be a very interesting chart. Give me 1 second here. I'd like to just do this, if you don't mind. Is that the one? Is that the one, or is that the one? Yep, that's the one. I just wanted to check because I want you to see what I can see, and I'm going to go right there. I hope the volume is not on. No, it's not. Okay, so what we're looking at here, oh, beautiful. I love that chart. That is the Dow daily chart that I show my subscribers to my opening call. We go through this every single day, and I discuss every single move. So if you are a Chapman Wave aficionado and you are looking at this, you're looking at the leg, the body that was made in the stalk leg formation, the neck, you get this elongated pattern that says, hey, wait, what's going on here? But this is really still a continuation of the neck. That's the head, and this is the beak. And the beak says you're going to go to at least 17,705 from the 17,991 high. You remember, I've been talking about this for quite some time. I said 18,000. I could be wrong, but 18,000 appears to me to be the millennium number that is going to be very difficult to break. And I was just very stupid because instead of trying to short a couple of times, just a tad too early because I'm fairly tight stops. I don't like just like a very tiny losses for my subscribers. So it means that very often at turns we go in a couple of times, and the third time usually works, and you make up all the difference plus of the little losses that were made. But I said it. I should have known. I should have said, let's wait for 17,970 to 80, that area. And that's where we can short, and we'll have a stop about 18,000 on the Dow, above 18,020 or 18,030. That would have been the best way to do it. We would have got it perfectly. We've done that before. I was so busy looking at these charts because I was getting so many signals in so many charts that we were getting to peak D, E, or F, even the G. And I had said, I believe I can even change this now, that I thought that the Dow, you can go back in the record, I thought the Dow was going to make a very rare peak G in the Dow. And this now is a peak G top. I have to now put that inverted V sign because we've already used up the arrow once because that's that peak F. And 17,991, at least for this moment, is the high that we're going to watch out for, because if at any point in December you take that out, you're on our way to new highs, higher highs, right in the 18,000s. I think that's going to have to wait, number one. Number two is the MACD is now expanding, stochastics expanding. That says that any bounce should just be a bounce. Now, this is going to be very interesting. In my Chapman Wave methodology, I show this quintile right here. That is, I show the chart patterns as they relate to the 120-minute Dow chart made a peak F at 17,991. I relate it to the 120-minute VIX index, trading now at 16.19 in leg B, and it should go higher to C and D. I relate to the Richard Arm's wonderful short-term trading index, except I never use it the way he intended it. I use it only with my own numbers, and that says that within 1 to 2 days, including today, there should be a bounce off the low of at least 6 to 9 S&P futures points. Now, let me just check. The future right now, ESH 15, had a low today of 20.2625. If you add that 26, it makes it 32 to 35. Yeah, we've already had a little bit of a bounce. So in a sense, we're starting to use that up. I still think there's another, there is another aspect to it that says you've got to still wait that second day because the selling is intense. But I'm looking at this and I'm seeing that there are itchy fingers out there. There are people wanting to buy this. Not only that, you've had a couple of stocks like UTX. It went to a new high, all-time high, and had a nice bounce today. I've got to see how my Dow quartet plays out. But right here is the Chin Index. Here is the Dow Daily and the S&P Daily in the simplest form, just no candlesticks, just the bar chart. I only need the highs and the lows, and that's exactly what we've got here. So wait a minute. And we've got a peak G in the Dow Daily, and a peak E in the S&P Daily. So this is setting us up for a pullback. Now, I did not know whether or not this was just going to be a pullback, whether it's going to be a far more serious one, but I did discuss that in my work, there is one particular indicator that is just, it's been an it's just, I met with someone yesterday who's often done a lot of work for me. In fact, a lot of these indicators right here is what he developed for me over the years. See all these numbers, etc. Well, we were at lunch and going through different things, and he said to me, he's moved away. He's in New York now. And he said to me, there is one person I do some work with, and for a long time, he's just been saying his very best indicators are, this is one that this person had developed for this other trader, and the unbalanced volume. And I said, it's a great tool, but if you don't know how to use it, it can be so difficult. But if you know how to at least use it as another tool, not the most important tool, but another tool, it is really important. So look at this. Here's the E-mini, pulls back. Look at the double top in the unbalanced volume, the blue line there. Look at the way MACD was turning around. It did not confirm the rally there. So that was a great signal. Now look what we've got. We've got, you go to the Dow, INDDU. Look what happened. Unbalanced volume, double top failure, pulls back. Look at let's go to the SPY just for argument's sake. SPY, complete failure. The stochastic was way low on all those rallies. Peak D, kaplop. Peak F in the 120 minutes. Look at the unbalanced volume. It stayed up right until that peak F, and then kaplop. So I love this index. You can call it just a technical tool. Look at the SMHs starting to pull back for the very first time. The MACD for the first time might cross, it hasn't yet crossed negative. The stochastic still at 90%. It's showing strength, but the unbalanced volume says be careful. Relative strength says failure pattern. 120-minute chart, big peak, deep pullback, and there it is. So I'm intrigued with this whole thing. And as I say, I don't know. This is one of the few times that in my mind, I have ideas of where I think we should go to. I'm not even going to discuss it until we're in position. In my newsletter, my opening call, I told you, as I said, we've had a couple of missed trades. They were really good trades, but I just did not give them enough room. Because I just don't like to be my subscribers to be in a losing position that goes just 3%, 4%. You can handle that, even 7% or 8%. We can get that back. It's not a problem. But then you get to 14%, then 18% or 20% on a stock that you think, it's going to come back. I want to give it room. I'm not interested. We're out of it. We can always come back. So with that said, we're going to go to the numbers. How long do I have? I only have a few seconds. I don't have the time for the numbers. When we get back, we'll talk about gold spy. I think that the commodities have a chance to have a nice little bounce here, and some of them are having it. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So we're back. Now let's go through the numbers. The Dow's down 173 at 17,678. The S&P's down 18 at 2,042. The comp index is down 33. You know what I'm going to do? Let me just do this. INDU. I'll do this at the same time. Why not? So there's the Dow. There's the 120-minute chart. Made a peak F, top in the Chapman wave. Let me put my down arrow. Whoops. Right there. And we plummeted down, and we are testing the candle of 11:30 on the 20th of November with a low of 17,600 and a high of 17,700. So this is what I'm looking at. 17,549 is the 9-period exponential moving average in the weekly chart, but it is this pattern right here. This is what we're going to be testing, this candle between 17,603 and 17,583. That's for the Dow. On the upside, the resistance now is very strong. Even if there's a sudden, I think it's going to happen today, there's going to be a sudden burst of energy to about Dow minus 110, maybe even minus 90. I'm not saying there is. I think there could be. And then we're going to see what happens Wednesday and Thursday. That is really important. There are so many people, money fund managers, this is the first time I think they actually are going to be buying on the dip. And as they buy in the dip, we'll see, do they get trapped or is it going to be a successful trade? So many charts are on Ds and Es. I don't know how they're going to be able to go to new highs. We'll see. So that's the Dow. So 17,000 at this particular point, 17,784 to 17,821 will be very strong resistance. Now, if we go to the One second. Okay, S&P. SPX.X. There it is. Made a peak E in the, wait a minute. Peak E in the daily. Right there. I haven't finished this chart. Right there. E. Actually, this is the down. Let me explain this. This is the down candle right here. Why? Because it closed under the 9 EMA. The MACD was bad. The stochastic was not good. But then it had that right arm extension. That was the clue to me. This right arm extension right there, that there could be trouble coming up in the next couple of days. That's why we wanted to short. That's why we have been shorting. And look what's happened. Sharp pullback. But now it's bouncing off this, I believe that's 32. It's bouncing off the 32-period exponential moving average right there, and it almost touched 2032 in the S&P, which is the 9-period exponential moving average. To me, that's going to be a key factor, watching that. And I still have to call this a peak A, a leg A, probably a peak A in the weekly. It's just, so the question in the den was, are we going to be going back, and will we break the October 15th low? And my interpretation is that we should not be doing that. That this is just a normal breather after a fantastic move to the upside. So do we get, we haven't even had, 3%, 5% yet. Do we get 7 or 8%, maybe 11%? I think we do. We'll see what happens. But I just wanted to be in position. Now, here's the thing. QQQ series. This is the NDX 100. Nice move. Look at this. It pulls back. And then what does it do? It refuses to stay down. So it's almost at the high of the day. And that's the reason I didn't want to short the QIDs. I want to short other things that have not, that are at their tops, but giving me much better signals. Now, this is giving me a more than one-to-one downside move. It's got the Chapman wave stalk leg with the neck, the head, and the beak is formed. Now comes this rally. How does this rally pan out? Is this going to be this up channel resistance, the inside track that I call the repellent zone? That's been working its magic right here. Does it hold? Does it give way? Do we make a new high? A new high would be really positive. A leg B above 106.25 in the QQQ series, trading at 104.01. We'll see. So now let's go to gold. GCG 15. One of the reasons why I actually wanted to do it yesterday, which would have been perfect. I have no idea what got into my head. I was just thinking of so many other things that I just didn't do it. But I really wanted to get into the long side of gold only as a trade. Why? Because the dollar looked like, even if it was only a peak C rather than a peak G, there wasn't very much room left on the upside. So at the opening yesterday, you would have had the dollar open at 89.20, open at 89.12. High was 89.20. Sorry. Open at 89.39. The high was 89.55. What's that? It's 16 cents higher. And then it pulls back. So that means that you've got yourself a pretty decent stop. You don't even have to go short the dollar. I wouldn't be doing that. But I would be saying that's the level to watch for leg D. And if it gets to D, it shouldn't go much higher than that. I didn't think it would. So now we've got, at least in the daily chart, I don't yet have a sell signal. It will be a sell signal with a close below 88. A sell mode would be a close below 87 to 86.50, and that would impact the daily. We'll be back with these when I get back. We'll just go right through this. Plenty of time. I'll be back. Basil Chapman, Tiger Business Hour.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back. Dow's down 164. S&P's down 16. You've got bonds up 29 at 143.5. You've got crude oil up 86 cents. I think there's a little change here. You've got the commodities starting to move higher. Gold is sharp. Higher, 36 at, where did it go? Gold is up at 1231, silver is up 0.86 and 17.14, and the dollar is down quite sharply, and we're looking at the dollar down 58 at 88.71. We've got Travis in St. Louis. Hi, Travis. How are you?
I'm doing fine. How are you this morning?
Well, thank you.
Good.
You'd like to look at?
Yeah, let's circle back to Clovis again, one of my favorites, as you know.
Yes.
And I know we talked on the 20th of November, and it just had a drug announcement, and the stock gapped down. I started to pick up my position back again, and I'm back to a full position. It's starting to show some strength, and I'm really liking how this chart's looking now on the longer term. But I just wanted to kind of see where your thinking is on it now. I know you're talking about a correction in the market possibly now, and but I do like the internal strength the stock is showing the last few days.
I think you're absolutely right. There's something going on in this stock that is a little bit more than news-related. Very often you can see the biotechs, they have big spikes up and then pull back. This one has a determined move up that can take weeks and sometimes months, and then it pulls back very sharply. So you're in the full position. I'm going to recommend this because the IBB is at peak D, and it hasn't yet broken down. It hit the 9-period moving average today. It's at 311.21. this is probably not, it's too small. I don't think it's part of the IBB, but it doesn't matter. It's part of that whole sequence. The weekly chart of IBB is in F. It could be brand new leg B. I don't know what to call it right now. I don't need to make a decision. It looks like a B, but just to be conservative, I'm saying F/B, and the monthly is G/C. I haven't yet got a signal in the IBB. I thought I had one, but that spike yesterday said the, how can I put it? There is still enough residual energy to say that shorting the IBB there are better places to be right now than to short. Let it fulfill its upside energy, because most fund managers, this is like the last bastion of strength that they're going to be running to on any rally phase. And yesterday's high of 316.80, I'm looking for round numbers. I see no round numbers. So this to me says you might be right about peak D, but it just might be a high-level consolidation at the moment. So now let's go back to your CLVS. CLVS is Clovis Oncology, and they made an announcement, and they've pulled back. They've recovered very nicely. They're filling the gap, and the gap needs to get to 53.27 to have completely filled the gap. And the high today is at 52.49. It's in leg B. I like it, but I love the way you've traded this. You actually haven't traded it. You've positioned yourself. I think it's been fair. I don't even want to interfere. I don't want to say a word about it other than in the 120-minute chart, we had almost a peak E because it was such a big pullback early today, and then whoosh, it comes right back again, and it's near the high of the day. This is just really good action. Someone is thinking that this is either a takeover candidate or that their drug is really specific enough and desired enough from the way it's acting.
Basil, I think it's both. Basil, I think it's both. I think one of these big pharma is going to take them out, or they're just, this drug. I know the drug pretty well, and I'm pretty confident it's going to be a blockbuster. But that's why, I'm in this thing, and I'm going for that peak D in the monthly, because I think this thing is going there early next year. But
so peak D, folks, would be at 93.34, and it's at 52.17. And these biopharms, when they get going, they really pick up energy to the upside. Now, I'm going to give you just one little bit of warning, and I don't want to change anything. I just want you to be aware that if there's a close that's at 52.24 in December, if it closes underneath 45, it doesn't look like it wants to right now, but if it does, I'd be real careful, because it's probably going to go down to the 40 to the 38 area, where it could hold there for a little while before another bout of buying takes it much, much higher. But in the meantime, the way you've traded is perfect. I'm just going to say to you, you want to see 52.29 right now. You want to see by Wednesday a week, by tomorrow a week, the 55s has not only been tested, but the pullbacks have made 51 the support area. That'll be absolutely fabulous technical. Those are the conditions that I want to see. If it pulls back, goes underneath 45, I say to you, gee, I would not be having the full position. I'd rather you wait. You can buy strength. I would not buy weakness if it pulls back under 45. I'd wait until it forms some kind of a base.
Right.
Hope that helps you, Travis.
Yeah, and I'm kind of thinking, too, I don't know what your thoughts are, but I'm kind of using this as a bellwether for the IBB. I know it's not in the IBB, the CLVS at all, but I'm kind of thinking if this thing has that blow-off early next year up to that peak D in the monthly, maybe it's going to kind of come in with the IBB making the major top that we've been kind of talking about for months.
Well, all I can say is it's fascinating the way the top stocks, like, for instance, Amgen, I've got it in G/C, and the stochastics pull back to 86 after being higher than that, and the MACDs pull back very, very sharply. But at this very moment, I'm just looking at it and saying, you're holding okay. It looks like you're not going to go much higher than 173, which is just above the previous high. But I'm watching the 167 to 166 support. Celgene was at a peak C, but it's still showing strength. So as long as you've got some of these stocks that have internal strength, even though they're now just a handful that are really taking the IBB to higher highs. That's the NASDAQ Biotech ETF. I'm looking at this and saying, have patience. You will get an opportunity, because when it pulls back, just like the 22% correction of October, it can be vicious. But yeah, you're right. So we were watching that. I'm going to put it on my list here as a stock to watch, CVLS. It's actually very nicely. So congratulations. You got a real strong one there.
Thanks, Basil. I'll talk to you later.
Thank you for calling, Travis. So now let's go through this, folks. What I want you to do is continue with our look. So gold, the GLD, right now has pulled back from the high. I believe that, I don't really know what to call this. Is this an F or an A or a B? It doesn't really matter at this point. It's how it holds. How does the dollar pull back? If the dollar can't make a new recovery high but makes a lower low, that relationship, you remember the Bach relationship of the counterpoint voices, the ones going up when the others going down? That's what happens. The mirror image very often happens between the dollar and gold. It's more unusual for them to go parallel. Normally they wouldn't go parallel for more than 3 to 5 weeks. So let's watch this closely. So in the meantime, back at the ranch, if I go to the continuous contract of gold, this is the weirdest thing. I've got different labeling for the continuous contract, for the GLD, for the GCG 15, that's the March contract. Sorry, that's February contract. I've got that as a possible B right now. It doesn't matter. It's acting well. And the MACD is, for the first time, I've got a really nice divergence with the MACD moving about to cross positive, with the 9-period exponential moving average now way down at 1205, where the price is at 1231. And I've got the stochastic since October having a positive divergence in the weekly. And I said, I think November, December will be where I get a chance, at least, of a really nice move in gold. But it's still, on a monthly basis, I still see it going to lower lows. But it doesn't mean to say it couldn't have a really nice bounce. And this, I think, is the bounce. That's all I can say. I think this is the bounce. I'll say it again. And as a result, you're looking at some of the stocks. Let me just look at ASA, one of my favorites, although we never actually buy it. Just a favorite because I'm originally from South Africa, and this is made up a little fund of South African stocks, even though I think they're from Bermuda now. Yeah, not bad action. A good start, at least coming off the ground. Now, what about crude oil, CL? Look, crude oil is attempting right here for the first time to see the on-balance volume try to turn around. Stochastic's making a higher high than it did before, so there's a positive divergence with the price coming down to a lower low. The MACD is flattening out. The histogram for the first time today is giving a bar that's reversed the trend. Day's young, anything can happen. Only 2.25 hours into the day. The weekly chart had a doji candle. Remember what I said? The bar of the break of the major left side support, in this case it's in crude oil, going all the way back, and I had an email saying that that person had a low of 33s in the crude oil contract. Mine's double, so I suspect that we just look, whatever it is we're looking at, mine is a double of whatever it is. But it's a long-term contract. So it goes back, way back. So I'm using that, and that's the level we're looking at. Remember, I was looking at the 74, 73, 74 area. Well, we just took it out 3 weeks ago, which says that the candle afterwards, if it's a doji, has one more week. If it closes below the doji candle, in this case below 63.72, then the very following week should see a bounce to test the body of that candle, that little, the candle itself rather than the wick. So that takes you to the close of 66, somewhere around 66. And right now we're at 63.69. So I think there could be a bit of a bounce here in crude oil. I think a trend has taken place, and all we're looking at are counter trend bounces. If you want to play a counter trend bounce. So I had a question again from the email requester of what to do with CLF. Well, CLF is Cliffs Natural Resources. It looks terrible, but this is the first time that I would say, do you want to just have a little nibble here at 7.42 CLF? This is the first time that I see the opportunity for a rally that could take it to the 9-period moving average at 817. First has to close above 759 today. It went above there to 791. Now it's way back down to the 738 level. But this is the first time that you can at least nibble on it, and I think that you have a chance to have a pretty nice percentage gain. Getting these for a couple of nice percentage gains against you can add up. So I'm going to say be careful. Make it a small position, and it's only a starter position. And, yes, I did see the lows in oil. I just don't know which. In 2000, let me show you something. I had a question about the crude oil price. The chart pattern looks exactly the same. I'm absolutely, I couldn't tell because I couldn't overlay the one above the other. It's just the price that's different. So I'm looking at crude oil, continuous contract, and it's broken in the monthly chart. It made the M formation, many M formations, broke the left side low of February of 2009. And that low was 63.65. So if you had a low of 33 being smoothed out and everything, my suspicion is we've got exactly the same chart. Whatever you're looking at, it's half of what I'm looking at. Although, what is the price now? If the price now is 63, 64, then I don't know what the heck's going on. All I'm saying is that that's what I've got, and that's what I'm going to use. So that's that, the crude oil. So this is a little bit of a bounce that we might get, but believe me, from when you see this happen to a commodity, that this is a crash going from 102.34 down to the low of 62.25 today. Look at that chart. That weekly chart, ugly. That is, there's not even been, there's just an A minus, and no A minus since then. I think this is the first time in the weekly chart we get a chance. No, I don't know if we can make an A minus because it would have to go to 69.55 this week. No, I think there could be an A minus. All right. Yes. What should we be looking for? So, the question is, what would I be looking at for a year-end in crude oil? A year-end means we've got about another, 2 or 3 weeks to go? Another 2 or 3 weeks to go? Let me double-check. Yeah. So if that's the case, I suspect that crude oil, well, that would imply that the dollar's going to rally back and close. I think crude oil, you know what would be funny? If crude oil closes the year at 71 to 73 rather than at 59 to 57. I'll tell you why it would be funny, because if it does that, it's going to make it really difficult for commodity traders to say, hey, we started the new year way off the low of last year. Are we now in an up move, or are we going to do the retest? To tell you the truth, the only way I can look at it is that it will take a little time, and if there's a rally, if I'm correct that there could be a bounce in crude oil this week, then I suspect that we close the year somewhere in that 67 to 69 area. All right, rather than at the lows of the year. That would imply that the dollar keeps going down, huh? That would imply that the dollar... Yeah, I think the dollar could take a 2-3 week hiatus. Yeah, okay, so that's my thinking. We'll be back. Basil Chapman, last segment coming up. And we've got the Dow down 176. S&P's down 17. Ugly market. I'll be back straight after this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report, that's 14 months, for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Not all gold stocks are the same. This offer is valid for current or new subscribers. All the details are on the front page of TFNN.com. The sale will be over before you know it, so act now and lock in this incredible price by visiting the front page of TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. So just for the GLD, if the GLD, the Gold Spider Gold Trust, trading at 118.22 of 244, if it closes, no, it doesn't have to close. If it pierces 120.50, doesn't have to close it. That'll be a very strong action. And then I suspect we're looking at an H pattern, another H pattern forming in the GLD. And if the USD JPY, the dollar Japanese yen, leg E starts to pull back sharply and then takes out 115, instead of 118.92. If it takes out 115.84, the weekly support, gold will go higher, and I suspect crude will be dragged up, and some of the commodities will act well. Now, real quickly, we've got the SMHs. The question is the components. We've got Intel, so we'll go to Intel right here, INTC. So this is the SMH is the market vector semiconductor ETF, made a high of 56.64 at peak D. It's down 41 cents, but it's at the high of the day, bumping up against the 9-period moving average, can be a real key. So Intel has gone to a C, a D, 37.89, that's 90, right? Yep. It's gone to a D and an E, and now it's pulling back. In the Chapman wave, you go to a D, E, or F, got to watch out. And that's going to be very interesting. Why? Because if at 36.71 INTC, if it takes out the low of today, 36, if it closes under 36, that's going to impact the 9-period moving average of the weekly at 35.50 and make that a magnet. Let's go to the next one, which is MU. MU is Micron Technologies. It's gone to an E, a peak F right there. Pulls back sharply today. Hasn't given me a sell signal yet, and it's a D/B in the weekly chart. This is going to be very interesting because it's been one of the big winners. If Micron Technology closes under 34.30, it's at 35.26. At any point in the next week and a half, that's going to say, uh-oh, timeout for the semiconductors. Now, what was the other one? Micron Technology. What did you ask me? Whoops, I can't find it. So let me just go to the SMHs because I've got them written up there. So Intel, AMAT, Applied Material, which was one of the biggies, but I think that Lam Research is overtaking it. Certainly, it sounds like it. Peak D in the daily. Let's watch this real closely. Same sort of thing. AMAT at 24.26. A close below 23.50 is trouble. LRCX. I think that's. Let me see if I can get LRCX. Oh, I hope I got it. Yes. Lam Research. I didn't even put that in. Haven't updated it. So this is peak A, B, C, D, A. I'm doing it too quickly. CD. So there's a doji. Oh, there's got the silent doji signal right there, trading at 81.11. LRCX, Lam Research. If it takes out, it's at 81. If it takes out 78 at any point in the next 3 weeks, that's going to say, uh-oh, time out. So all of these, if they make new highs by this coming Friday, or Monday of next week, that's very positive action. But they break those supports that I was talking about, it's a real problem. So Texas Instrument, final one that I'll do before we wrap it up. Don't forget, you've got a great option show coming up. See, those weekly charts are still very strong. I'm suspecting this is just a pretty serious pullback in the daily charts, but the weekly charts so far look really strong. I haven't got the label for this. So this is A, B, C, D, instant restart, A, B, C, D, E. Yep, it's got an F doji. We'll see, but it's holding beautifully. Texas Instrument holding very well. It's going to be very interesting. All right, folks, I think that we're about to wrap it up. Just let me tell you that the VIX index, where it needs to go to and where it needs to hold, is at 16. If the VIX index starts to trade in the 16s and even touches 17 just once, it's suggesting that Friday, the 9-period exponential moving average of 16.75, you could see a close above it. Wouldn't that be interesting? And a drop below 14 is a problem and the market goes higher. Thanks for being here.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.